Hi everyone, welcome to my channel. I'm Doris. I'm here to show you about my stock account and today's market update. Today the Nasdaq account is $66,083.14. Today, Apple has closed down 0.07%, SQQ continually closed down 4.28%, SPY closed up 0.99%, and United Natural Gas closed down 7.29%. The market typically closed higher. Dow Jones Industrial Average closed up 0.34%. Nasdaq closed up 1.51%, and S&P 500 closed up 1%. Today, the industries that performed well were particularly biotech and semiconductors, particularly led by the NVIDIA's new good news. So let's take a look at the economic data front today. At the end of last year, U.S. household wealth hit a record high, and particularly 30% of net worth is in the stock market. The Federal Reserve stated in its report that between October and December last year, the net worth of U.S. households increased by about 3.2% month-on-month, from $151 trillion at the end of the third quarter. It increased by $11 trillion from the end of last year, which is a year-on-year up 8%. Among them, the valued stocks held directly or indirectly through mutual funds, insurance, and retirement accounts increased by $4.7 trillion from the third quarter, from $42.9 trillion to $47.6 trillion. In the fourth quarter of 2023, the S&P 500 index delivered a whopping 11% total return, including reinvested dividends, which has largely spurred the growth of U.S. household wealth. The rally in the U.S. stocks has continued into early 2024, and the S&P 500 has rewritten its all-time closing record 16 times since the beginning of the year. The value of U.S. home-owned properties fell back to about $49 trillion in the fourth quarter of last year, after rising the first two quarters. At the same time, U.S. households are generally satisfied with larger interest rates offered by savings, certificate of deposit accounts, and money market mutual funds. Total household bank account balances increased by nearly $270 billion to $18 trillion, breaking a record 6 consecutive quarters of decline. Despite this, deposits have fallen to 11.5% of total U.S. household net worth, the lowest in 4 years, as stocks now account for more than 30%. Another thing that the Fed presidents have been talking about is their expectations for an interest rate change. Cleveland Fed President Loretta Mester reiterated on Thursday that she believes the Fed will be able to lower interest rates this year, but there is no urgency to act yet. On the same line with President Jerome Powell, Mester is showing a similar hesitation in whether they should lower or keep a high interest rate until any time in the future. She said, "At this point, I think the biggest mistake is to cut interest rates too early or too quickly without sufficient evidence that inflation is on a sustainable and timely path to 2%, she said. But given the outlook, Mester still expects the Fed to cut interest rates this year. She's a voting member of this year's FOMC and has voting rights, but will retire later this year. And as expected, the economy is in terms of rate cuts, she said. I expect we find ourselves in that situation later this year. And my base case is that when we do start cut interest rates, we're going to do it at a gradual pace so we can continue to manage risks." This is all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.